oil prices jumped on Thursday. This is due to the widening conflict in the Middle East. Concerns, of course, are mounting that the clash could disrupt crude oil flows from the region. Prices jumped 5%. This is after U.S. President Joe Biden said the U.S. was discussing possible strikes by Israel on Iran's oil industry. Iran is the 7th largest oil producer in the world, exporting around half its production abroad, mainly to China. Israel invaded Lebanon following Iran's strikes on Tel Aviv in support of its ally Hezbollah. Independent analyst Khaya Sithole weighs in on this discussion, and he joins us now. Khaya, a good morning to you. I mean, there's so much to unpack, right? There certainly is the questions around how people really have viewed the violence, the escalating violence in the Middle East. This week, people talking about whether or not we're seeing ourselves at the brink of World War III, which I think is a much bigger discussion. But following the missiles launched on Israel by Iran, you then saw Joe Biden, U.S. president, telling reporters, he was asked by a reporter if he supported striking oil facilities in Iran. And his words, we're discussing that. I think that will be a little ... anyway. This is really quite something, right? So what do you hear when you hear Joe Biden saying it certainly is a discussion?
Good morning, and good morning to the viewers. So obviously the geopolitical conflicts that we've seen escalating are a cause of concern for everyone. But what is also obviously of interest primarily to countries like South Africa is not only the fact that we obviously want to see a de-escalation in tensions, but also we have to be able to map out what the possible economic consequences might be. Yeah. And we do know, unfortunately, that the world at large and even South Africa is highly reliant on the stability of oil supplies from areas, particularly in the Middle East. So whenever there's any element of conflict, it does create particular anxieties about disruptions to supply chains that inevitably tends to lead to a spike in prices. And obviously, how long that spike lasts and how we manage it is also subject to exogenous factors, including the strength of the currency and the duration of those conflicts. So it's always something that we always have to keep a keen eye on, but there's usually very little we can do to influence it otherwise.
Yeah, it's interesting that you say there's very little we can do to influence it otherwise, because, you know, South Africa's obviously been quite vocal where the tensions in the Middle East are concerned, particularly around what's happening in Gaza, taking it all the way to the International Court of Justice. And one wonders, you know, if you look at the political economy and where South Africa sits in the I suppose the broader geopolitical spectrum, if our being vocal is, you know, risky for our economy, in your view?
No, because what tends to happen, unfortunately, is that when you speak about oil prices in particular, there are essentially two dimensions to it. There is the question of who actually produces the oil, and that's obviously a whole range of countries, some of them who have formed the cartel that we refer to as OPEC. Yep. But when it comes to the trading dimensions of it, there is a parallel market made up of oil traders and oil speculators who are essentially the ones that buy the oil in advance, who are the ones that then finance the shipping and the storage of the oil across the world at large. So obviously what motivates them are the simple questions of how these conflicts may influence their ability to influence the economics or the economic dimensions of the oil price. And unfortunately, because they are capitalists by definition, and they are indeed in this for the money, they tend to be less enamored on the question of what the diplomats and the diplomatic conversations are. They are simply very binary in their analysis. How long will this last? How does it influence our supply chains? And what prices do we need to factor in order to obviously cover our risk? So you essentially have to be able to figure out whether those that essentially control the economic dimensions of the oil price are themselves seeing this as a possible risk period. And if it is a risk period, you see it translating into the type of prices that they charge, and obviously that ultimately translates to the pump out there. But you essentially have a market that's split into two, the producers versus those that actually trade on it, which is where the risk lies, because it's very difficult to influence capitalists.
Yeah, let's bring it back home and talk about, you say there's very little we can do about what happens, I suppose, with geopolitics, and then, of course, you know, the decisions that are made by even OPEC, for instance, as you say, right? But I wonder then what, if at all, there is some power that South Africans have, and I'm talking about individuals, not as a nation. Some would argue that, okay, the violence is expanding and continuing to grow, and so that horse is very much bolted. This week, though, Khaya, we were celebrating celebrating the fact that, oh, we've got a significant drop in the petrol price, and people saying, you know, those prices going all the way back to what they looked like in 2022. Really, really exciting. The likelihood that that's going to continue if this war continues. So I'm talking now about the everyday South African, what they need to be thinking about, and is it time to tighten our belts much further than what we already have?
Well, 2022 is actually quite an important reference point, because at the beginning of 2022, we saw the escalation of the conflict between Russia and the Ukraine, and obviously the invasion of the Ukraine, which really led to a massive spike in oil prices on the basis that people didn't know what the supply chain corridors would look like in the immediate term, and obviously over an extended period of time. So what we then saw at that point in time is that the escalation was so steep, even South Africa's government had to respond. So what they did is that instead of implementing the annual adjustment to the fuel levy that would have been implemented just after the budget, they decided to delay that by 3 months, just to be able to enable South Africans to actually, diminish the impact of the spike in oil prices. But unfortunately, that moratorium was only for a 3-month period. And as soon as that moratorium ended, you then saw that the spike in oil prices immediately injected a cost of living crisis that South Africans are still recovering from. And when you factor the fact that obviously that spiked in inflation problem that then also translated to high interest rates, we've literally been living with the consequences of what happened at the beginning of 2022. Now, since then, there's been a bit of stabilization in the oil prices, in that they're not at those elevated highs that we saw them. And of course, depending on what happens with this current escalation in crisis, we may start seeing that creep up towards those types of prices. And what then that means is that for South Africa, we then again have to hope that our currency somehow remains within a stable territory. In other words, it's not too volatile, because the more volatile our currency, the less predictable what the oil price is going to be at the point of transaction. And that simply means that South Africa's government is going to have to react at the point in time when deliveries make it, when they have to do the monthly fuel price adjustment. And I don't think that at this stage we can rely on the possibility of a moratorium of an increase in the fuel levy, which is due at the beginning of next year, or even a suspension of that levy, because we obviously know institutions like the Road Accident Fund are already struggling. So the idea that we could interfere with their revenue stream is something that is just very difficult to solve. So there are a lot of moving parts. And I think obviously for South African citizens, unfortunately, this is one of those institutions, this is one of those instances where we really live in hope rather than being in a position to proactively intervene and decisively intervene. We can't even go in March, because the government will say, well, these are the inputs into the oil price. There's absolutely very little that we can do as a state. Okay.
Yeah, not the most encouraging of responses, Khaya, but thank you so much for speaking to us. And it certainly speaks about, I suppose, proofing yourself against what is coming and tightening that belt. Nonetheless, that is to prepare yourself. Thank you so much for speaking to us, Khaya Sithole, the independent analyst. We're going to move on.